All righty, Doc here from North America. Good morning, good afternoon, and good evening. Here we go again. It's Tuesday now, and we see all kinds of unique things. I saw some of the bond market problems they were having in Europe. Going to have to do a little bit more investigating so we can explain that in this clearest, accurate concepts and ideas. But I was looking at a couple different I guess states. I guess that's what we call, like, Italy is a state and Germany is a state of the European Union. And so the bond markets are getting a little whacked at this point in time. And we've talked about that. This is the manifestation of inflation, and it kind of freaks things out. Let's check to see if our volume is good. Yep, there it is. The volume is good. Okay, as Buckwheat would say. And so what do we see here this morning? You can see here there's the Swiss over on J4X. You can see the Swiss on Chicago Quant. We sit there and we use them as guideposts to where the markets are going, try to give insight and comprehension and direction of what our mathematics is trying to tell us. And so you can see here the Swiss has three green hinky ASCII bars right there, moving up. We call this the Manhattan indicators. And you can see we're moving up here. That's telling us that there's buyers. Over here on Chicago Quant, we have the, so we can grab a hold of that. Right there, it tells us that we went into a daily buy 3 days ago. Same situation with green dots. You can see that. Today, no dot at all. And at the same time, we are in a weekly buy. Again, we thought we were going to see the bottom end of the range because we assumed, bad thing to do in trading or anything else, we were assuming that that they had to raise rates. We thought that the exchequer out of London was kind of heads up on that. Now they've done 2 rate increases since December, and the Fed has done 0. I guess what they may do is do a 50 percentile in March once Mr. Powell is sworn in, and then they'll probably stand there until literally after. Who knows when they'll do it again? But for sure we'll probably see some type of interest rate increase, and we'll go from there. It seems to have mild effects on the equity market. We see the equity market kind of, just kind of firm and, just steady. I mean, we are leaking like a leaky rowboat on some level. It's moving down, but it's not exactly getting crushed. We're only down like 10 or 15%, that type of thing. I think the Dow might be down 8 or 7%. The S&P 500 maybe 10% or 11%, something like that, and the NASDAQ down about 14, 15, something in that range. So nothing major really. I think that overall you can see here the way the currency pairs have been, they like to play inside their ranges, and we just keep on observing that and seeing what we can learn from that, understand why the last couple of years they've hung out in those ranges. I guess that's about it when it comes to trying to open up the webinar here to explain what we're seeing here and so forth. And again, I think tomorrow we will be more in depth on what's going on in the European bond market. We are seeing prices jumping all over the place in the different European states. So we'll see if we can come up with an interpretation of that. All right, from there, let's jump over to the euro and see what the euro is doing. I did notice earlier this morning when we sent it out from Chicago Quant that there was some selling going on there. There it is right there. Now, we still have a small green going on there on the J4X, and that will change soon. And then you can see over here on Chicago Quant, 2 down days in a row, but very soft. Nothing major, hitting the 50 percentile again inside the channel. And you can see today it's just leaning over. You got the red dot, you got this, and give J4X another hour or so, and it'll roll over. But you can see already this obviously being the most accurate of the public indicators. This is a fast stochastic versus a slow stochastic. And you can see them competing against each other. You can see it's trying to roll over in here, just like our math is doing the same thing. And what we've done is we've taken our proprietary formula and we've put a slow, or what we've done is we put a stochastic, not a slump, but a stochastic to it. And so that's why it has that nature to look like this. Except the only difference is it doesn't have a top end or a bottom end. It's like Al Einstein used to say, it's all relative. And it's got nothing to do with his family members. So that's where we are there. And so that's why it looks like that. Now, below it, you can see the weekly, it's in a weekly buy. What's going on? Let me just double check that. That's right. So it went into the weekly sell a couple of weeks ago. There. I don't think we see the, we didn't put I thought there was a sell in there. Where'd the bar go? Let's see if we can steal one. We'll steal this one. Move it over. This way I don't have to create another one, because I'm going to have to create one anyway because it's jumped into the buy again. And cut out the extension like so. And then we have to put it in where last week it closed in a weekly buy right there. There we go. And so you can see here it went into the buy. It wasn't a buy from here, but now you can see the weekly has joined in. But the daily is starting to roll over here. We'll see what that does, and that mainly probably just because it's banging up against the 50 percentile. And when he's trying to stay inside the range, in this case, looks like it's trying to deal with the bottom end of the range, which is kind of surprising because we really thought it was going to go play with the top end of the range. See how it played with the top end for about 6 months, and now it seems to be playing with the bottom end of the range. So we'll just see how they keep on playing that out. What else can we say about any of that? I guess that's about it when it comes to the euro against the dollar. And from there, we slide over to the GBP British Pound. I saw the Exchequer come out this morning and said, don't ask for raises. Don't do this. Don't do that. Just be, just accept that you have less money. Something like that. I don't know. It was a strange statement. Anyhow, you can see here, that's there's so many of those socialists in the government. I'm sure that if he was told that he had to keep, give back part of his paycheck, basically, or not get an increase, or not all those perks that he gets, I guess he'd think twice. But when you're in government, you can think in a socialist way, since you're spending other people's money and it's not your money you're spending anyway. All right, so that's the strange thing of the Exchequer going on. But you can see here a couple reds. In our case here, just let's pulling that over there. Right there. You see no dot that day, but we were in a sell, so we closed in a sell there. I don't know where the lines have gotten to, but it happens like that sometimes. They disappear on us. And you can see a second day of it there. And it's just kind of trapped between the two ranges, the 50 percentile side of the down edge of it. And you can see our weekly rolled over. I mean, look at how flatlined it is for a couple of weeks, just going nowhere. And, oh, I'm sorry, it went into the sell. That's what it is. Where's the sell line? See, minus. Plot 1 is minus 0.00010. So it's a minus. Why is that not on there? These things like that disappear. I think it's because I don't save them when I put them in, because I'm talking and I kind of forget that I need to save them. Save workspace. Save workspace. No, not close workspace. All right, well, we'll do that again. There we go. All right, get that back there. Here it comes again. And so, you can see there's the sell. Oh, good. It stayed in there. Excellent. And so we're pressing down. Interesting is this is a 3-5, So the blue line is the 5. It's kind of a lot of times when the 5 breaks below, like right here, it says that there's more pressure than we realize, okay? And so, I could almost at some point in there say, okay, you definitely want to watch out for a slide. Even with the green or the 3 staying up, that's why we call it the super, because it's always insightful. Same thing on the buy side too. You see here, the green line is below uh, the white and the blue has tried to pierce up, but it's still below the white. And then right here, it's comes above it, and sure enough, it still slides a little bit in here. And we go into a daily buy, and at the same time, the blue really is pushing up hard. Notice that's where the weekly because we're looking at a weekly of just the 3. We're not really looking at the 5. But if we were looking at the 5, our weekly buy number would be right there. And see the difference? See how it's teaming up with the daily and showing us some strength is there. So just because we try to be conservative here, we don't want to see anybody try to get long on a longer term or get short on a long-term signal without, we don't understand exactly how everybody trades. There's a lot of people here, they may trade one way and I trade a different, or the math is talking about a total trading where you use options, you use binaries, you use the underlying spot. And so, you can do it with those things. But if you're just trading spot, then you have to trade in a much more conservative way because you don't want to get stopped out. The next thing you know, you find yourself, how many times, and I say this a lot too, how many times have you heard someone or yourself say, I was long, I got stopped out, and then it went where I wanted it to go? I mean, I can't tell you how many times I've heard that, or vice versa. I'm short, I got stopped out, and then, would you believe it, it rolled over and crashed. And that's the whole idea, is not to get stopped out and have a position on that you don't get stopped out on. Now, some people go, oh yeah, right, all that money. It's like, no, if you use binaries and you use options, call or puts, and combine them together with your underlining, the spot or the futures contract, you don't have that issue. But that's for another day and another story, unless someone here right now would like to ask that question about that. But that's quite all right. I know it's only Tuesday, so people are still getting retuned in, and so that's what that's all about. But that's what the blue line is telling us. It gives us kind of like an advanced warning, like right here. When that started to do that, especially basically right here, the blue line was above the white histogram, but it was trapped in between there. And then now it's below both of them, and it's playing with the 0 line, and that there's issues coming. And sure enough, there's a slam, and it happens. And so at the same time, we were in a daily sell from here, and so it catches it. So that's how you read that little blue dashed line when we have a super up there. Sometimes we just run a 3, like right above it, we're just using the 3 without the 5 super. And that's what that's all about. Now you can see here, it's trying to do the same thing on the upside. So maybe, we'll see, maybe cable will, start to get some firmness, or this is short-lived, what do you call it? Short-lived, it's a short-lived strength. That could be that could be also the same thing. That's what I'm trying to say in English, is that it could be short-lived, a little strength, and then all of a sudden rolls over again. I don't know. We'll see. We follow the math. So the real key right there is, basically follow the numbers. That's pretty much what it really comes down to. All right. Let's see. Now, from there, we jump over to, let's see, where do we jump over to? Go over to the Turkish Lira. I'm just answering a question. There we are. All right, now let's go over to Turkish Lira. Right. We'll look at dollar Turkish Lira first, and then we'll go to the one we like to follow more closely, and that is, let's put those there. All right, and let's put it up on J4X at the same time. Right there. So you see, buy there for a couple of days, and and the weekly's perking its head up pretty nicely there. That's cool. You can see here on J4X, 5 days of a green, just like we had 5 days of dots. And you can see this thing is lifting up towards the top end of its range. Now from there, we slide over to the Euro Turkish Lira. Right there. You see same situation, strength, just like, oh, where's the little lines? There you go. Okay, I'm confused. Oh, there it is. You see same thing, the strength. And then when we go over to here, right there. Yeah, no, that's Euro. Let's find Euro Turkish Lira right there. You see same thing, it's trying to roll over, but the weekly is looking up pretty firm there, which is cool. But I don't expect to see this product do anything but trading that range until, I would imagine, until there's a problem with the free puts. And I doubt that there's going to be a problem there because it's been imagine if they'd have done these things when it was at 6. It would have been a whole different game. I guess at that point there wasn't as much desperation going from 1 to 6. But when you go to 1 to 18, that's what you call hyper inflation. And you got to be careful about that stuff. I'm sure the population, there's been all kinds of disruptions in the population about the leadership. So I guess that was like the last straw, and it's been a really great strategy. It has been. It's been a really good strategy there. So you can see, Turkish Lira holding very firm in that big rectangle that we've developed now for the last couple of weeks. We have had up there, and we don't expect to see it to break out of either side of that. So in other words, I think that's going to be the range now for the width of that rectangle is about as much as I think it's going to move around for a while. We'll see. Only time is your friend, traders. When people say something or people suggest something or math suggests something, just watch over time to see how accurate it is. You can see, for us, we do that live for you. We go into literally within an inter-minute trading sometimes, or minutes of trading, using the same mathematics that we use on the dailies and the weeklies, and you can see the accuracy is equal on both. So that's the way we do our thing around here. And so, let's see. What else can we say about that? I guess that's about it. Let's go from there to the Canadian. There we are. There's the CAD. Kind of up a little bit. It's been a daily buy for a few days there. Climbed into the, now where's the line there? The weekly buy is right there. Let's do that. Matter of fact, let's turn on the super too, just for curious sake. Talk about something that has some unique characteristics, that's for sure. We can get rid of the cute little circle. Save file, save. And let's turn on super. No, not that way. There we are. Let's use this mouse instead. There we are. At least I did not hit the delete. That's always good, Okay, there we go. You can see how when it broke underneath here, oh, it really was like right here. Usually starts off about a week ahead of time. That's why just kind of let it be. And then you see it breaks underneath here, and boy, it teams up. When that daily sell gets there, it's definitely comfortable to be crushing down, and vice versa. It breaks it above here and joins in with the weekly. Basically, that's what it's saying when it gets up to here and joins in with the daily. The weekly and daily are in harmony, and you see the strength. That's all. It's just it's kind of a fun thing to see. All right, from there, let's see, what do we do from there? Let's go over to, let's see, go over to, we'll get there. We're going to go to the oil contract. Usually what we do is from Canadian, normally we interpret the actions of Canadian with the strength, upside strength here means that oil should be going down in value. Same thing with the weekly there. So let's take a look at oil. Right there's the Canadian. You can see all the jumbly going on there with red and green, red and green. And at the same time, let's put the oil contract up on the screen. We'll leave J4X up with the Canadian and show you what we're talking about there. So where am I at? Right there and right there. And let's put that up there like that. So there it is. So you can see there the crude oil trying to roll over here today, and you can see the product Canadian has been trying to go up the last couple of days from that. The Canadian was trying to tell us that there was a little issue going on. Let's just take a look at it through. So I guess that's about the best way. If we go like this, let me see. There's Canadian. Yeah. So okay, that's not too bad. And you can see here, this action, it's been pushing up, and this is obviously going down, and that's the way they normally go. So the Canadian is giving us a fair warning about some issues about profit taking in the oil complex. Because I think our title yesterday was 8-year high in oil. I think that's what it was. We're hearing people now talk about $130 oil. We're kind of a little skeptical of that, but anything's possible. If there's more buyers and sellers, then it's going to go up in value, that's for sure. Take a sip of our tea again. There we are. So, and then same thing with the metals complex. Let's just take a look at gold real quick. And gold, normally gold is kind of, backing off a little bit. You can see it's down a little, nothing major. And you can see was flirting with the weekly. You can see now it's a little below it. Yesterday it was above it. It's at -24. And then what we do is we go over to the South African rand, figuring that since gold is sideways to basically, or down a little bit, that we would assume the same thing would be going on with the South African rand. So let's take a look at the South African rand. Dollar rand. I know it's right around here somewhere. There it is. You see a firmness there. And let's see what it's showing on the up-to-date. Let's see, where's it at? There we are. And what's kind of interesting is it's actually, it's in that buy. So, it's telling us that the metals complex is kind of weak. I guess that's the best way to describe it. And Monday seemed to pressure it. You can see it here on J4X. It's down a little bit, but with 3 green dots and a daily buy for 3 days right there. Steal some of these. Steal that one. Well, we'll just see if we can slide over and grab one. There we go. Let's grab that one. There's the buy. And it went into the sell a few days back here. Right there. Let's widen that out a little bit. Is that the one that did it? No, it was the one day after. Right there. And South African rand is just kind of trapped in its own situation. There's not a lot of love for it. You can see it's been in a weekly sell for a bunch of weeks. Almost made it into the buy at one point right there. You see it's been in the sell since up in here. And it went lower, then it went higher, and then it went much lower. And it's tried to get back to the basic range of it, where we went into the sell up in here. You know, it started to fight its way up to there, and then it failed again. Now it's doing it again, and so this is a weaker rand when it goes up, and obviously more valuable when it goes down because it's against the dollar. Okay, so there's the South African rand. From there, let's take a look at the ruble. We're thinking the ruble will be down because the war talk seems to be going further and further away. That's the way we see it. Went into the weekly sell last week. You can see the ruble's moving down. It's been in that daily sell since right there. And so, you know, we think that that war talk is, which we keep on saying, it didn't make any sense to begin with. All we thought Mr. Putin and the Russian Federation was trying to do is push up oil prices, not much more than that. It was more of a pocketbook issue than it was about a command and control of another country. And so, you know, we had a hard time believing that they would even want to take the responsibility of being that involved with another country. I mean, you know, there's a lot of issues to deal with when you go to war, and obviously they're not good economically, which would piss off a lot of people in your own country. So, you know, we used to have a saying here in the States: you could only have guns or butter. And these times, with the way the D's or the D party here likes to spend money, they've been having both. But sometimes that day of reckoning comes around the corner, and I guess that's why we've been seeing all these red waves now for about 3 or 4 years, or 5 years, something like that. And they go back and forth. But overall, they don't. But overall, yeah, I'd be much more happier to see that type of action instead. Yeah. So anyway, what else can we say about that? I guess that's about it. No war. I guess that's what it comes down to. No war. Just making money. Money, 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 money. That's right. Let's take a look at the yen right there. And right there. Now that yen has got me really curious. We're at something like a 5-year high in the yen. And you can see a couple of days in a buy. And we just are playing with the weekly sell right there at the moment as we speak. We'll see how that plays out by the end of the week. Now, what else can we say about that? I guess there's not much more. It's just that the yen is, overall, the whole Japanese society financially moves in a very, very slow, steady, consistent pattern. I remember, 6, 7 months ago, they declared that no more zero interest rates, no more minus interest rates. We're going to pay something. And that's a smart move, and at the same time, we've seen their stock market go from 39,000 down to like, I don't know, 7,000, 8,000, something like that, and over the last 30 some odd years. And and now it's climbed to almost 2/3 of the way back up, maybe even a little bit more. It's gotten to the 29,000 area, which is really nice to see. That was a very confusing time to see their stock market go from 39,000 down. Now, obviously, there must have been a currency translation having issues. At the same time, I remember there were 800. I remember at one time when it was trading in the in that high range. The yen was like 500 yen to the dollar, or 800 yen to the dollar. I remember it was a very high flying thing. Now it's 1 point. Yeah, can you imagine that? Now we're looking at the yen. It's at 115 to the dollar. It used to be 500 to the dollar. So there's obviously a combination of all of it: the currency translation, the change of it's like an inflation thing, really. I guess let's see. As your currency comes down against the dollar, that means that you have more buying power. It only takes 115 yen to buy a dollar, whereas before it took 500 yen to buy a dollar. and so it obviously has some influence on the the rest of the economy in a asset value way, which is so in other words, when you're looking at assets, there's a larger scenario that's going on, and that's why we kind of laugh at the Chinese market. We don't. It's listed as a developing country still. You think if they were really a powerful industrial nation, I saw a number. No fact, I saw a number yesterday that said that Russia and Germany, no, wait, Russia and China. That's what Russia and China are only 20% of GDP on the earth. That's all it is, 20%. And when you take a look at the rest of the world, it's 80%. And if you didn't have China, if China's currency was floating the way the Russian Federation's currency is trading, and I want to say bravo, it's a real currency like Turkey and British Pound and so forth. But if the China currency was really floating, where market forces had some measurement, which they don't, then we wouldn't be seeing these numbers that they show us all the time of it being the second largest GDP in the world and so forth. It's not. It just isn't, because it does. They don't have a currency to match it to. You can't have that unless you have a currency to match it to. I have to answer something here. Let me just answer that. There we go. There we go. Just wanted to tune out someone saying that the universe is an illusion. I think it's an illusion. There we are. Just some physics jumps into my webinars every so often where I have to answer somebody. I don't usually, I don't answer just anybody when it comes to science. I end up, well, I would, I'm not that arrogant at all. But, just the communities that I communicate with in physics and so. Right, not a illusion. There we are. Now I feel good because I gave them a laugh. So I laughed at their posting. Okay, so from the yen, let's go over to the last one. That's the Mexican peso. Right there. Let's put it up on J4X here. We're curious how this is all going to play out. This big, let's contract this. We were following all the little pops, right there. I don't know why we don't have more time on there, but anyway, it was trapped in its range. It was playing with its range for a long while. And then Mr. Biden had some type of meeting with the two countries, Mexico and Canada. The three of them got together, and this thing exploded like that. So this is the Biden black hole, I guess you would call it. And then now it seems to be falling back and staying inside its range. So we just thought, it's well worth watching. Every time it tried to come off the bottom of the range, it would jump up. So and that's the curious thing there. I think it's going to stay back in its normal range now that it's all over with, Okay. So that concludes, what does that conclude? That concludes the other four currencies that we watched. So we look at like 10 pairs. Now, anybody want to see anything else, just shout it out, throw it up on a chat line. We'll take a look at it. But we only really follow, we have lots of currencies in there you can see. As you can see, when we go over to our Dukascopy day work page, we got all these currencies, like there's the Zloty against the euro, that type of thing, or NASCAD, or, let's see, you can see, what else is there? You can see South African Rand, Peso, one of our favorites, the GBP JPY. We find that fascinating. You know, the Aussie yen. You know, we've got a bunch of different currencies up there we can automatically run to, and then at the same time, we're always happy to hear another pairs trade. You know, because that GBP JPY one is a really fun pairs trade. You know, it likes to trade its range very comfortably and consistently, and that's a good thing for traders. You know, you want it to be consistent. You want it to be trend. You want the trend to survive, have a decent trend, so you can get in it and then get out of it with a profit. And that's, you know, it could be a long or a short. It depends on what it is, whatever the math says it is. All right, and that was me and a cup of tea again. So now let's jump over to the metals complex. That's what we do from here. We zip over to the metals complex. Let's see. Not there. We have oil up on there, but here is silver. We showed you that gold was kind of sloppy sideways, and let's show it to you right. Let's do this first, go like that, and move this over. So there's gold. You can see it's just kind of sloppy, almost unchanged, but it is in the buy. And now, remember we looked at it about 10 minutes ago. It was minus on the weekly. Now it's plus. And it's just on the edges there. Let's take a look at silver. There's silver, same situation, moving down from yesterday, but holding up in its daily buy. And the weekly is holding up by the hair of its chinny chin, I guess. Let's see, what is that? What's the weight? Let's do this. Let's get rid of that weight. But that's the weight format. Yeah, that's format. All right. So let's get rid of the white, and you'll be able to see the green. The green is a 5 now, so it's in the plus again on the weekly. And same situation. Let's do that over here too. Turn off the white. Right. You see that's holding up also at the same time. So we're seeing just a little weakness, maybe this time. And when we tighten this up, you know, maybe baby will. Unfortunately, this is starting to look like a head and shoulders, which is not exactly what we want. We want like the reverse head and shoulders thing like that right there, which gave us this move. Now it's this whole thing right here is starting to try to do the opposite. And we keep on shaking our heads. Doesn't anybody know we have inflation? You know, why aren't these metals markets moving up, not down? But it doesn't seem to stop. So, I mean, they pop it and then roll. Pop. What's that like when you catch on fire? Drop something and roll, right? Try to smother the fire. In this case here, it's like the fire or the flame is inflation. Can't they figure that out and start buying this stuff? But it doesn't seem to be happening. It seems extremely odd out of that. It always, you know, got me twisted. I'm like, it's like the fundamentals keep on getting thrown away. Every time we turn around, another fundamental becomes less legit, I guess you could say. I guess that's one way of looking at it. One moment it's respected, the next moment it's not. It's like, oh, darn. Oh, darn. All right, from there we'll jump over to, let's take a look at natural gas. Now that the war drums are being calmed down a little bit there. There is the natural gas. You can see here, it was reading that event even faster, wasn't it? Back a couple days ago. I think this was when I saw the foreign minister of the Russian Federation come out and say, this is absurd. Or maybe it was around here. They said, this is absurd. We're not going to go to war. So I am surprised we're still in the weekly, but that's probably because it's the winter time and people need, you know, energy to keep warm. And so that's probably what's going on there. But overall, I think the war price is starting to slide out of it. We'll probably fall back into the 3s there. Now let's take a look at it on J4X. Right, right, where we go? There it is. Same situation, 4.2 or 428 a unit of natural gas. And you see the pressure on it just like here on Chicago. So they're both marching down right there. It's doing a little cheap bounce at the moment, but nothing major. And the weekly is holding up. Now let's go take a look at European gas. Right. It's here somewhere. Right. Where are you? There's light. There it is. There it is, right there. You see it's dropping too. It's doing the same thing. So I think this is where the Russian Federation came out and said something like, no, we're not invading. The minister himself said it. We're not invading Ukraine. So he said something pretty prolific too, like that's it's not realistic and it's not rational to say something like that. I think he said something like that, which was very positive as far as I was concerned. In this case here, this could have been just our cold weather kicking up. This little pop here in the same period, and now they're joined in together, moving down, as you can see right there. They're doing their thing, and it's come down from like the 31 area or something like that. And, there it was up there up in the 30 area. Now it's down to the 27 area, so that's pretty good. It's moving back down. We had actually, I think Mr. Biden was with the Chancellor of Germany yesterday, and they all were on the same page, like, don't worry, be happy type of thing. We will support, anything if there's an invasion of Ukraine. We'll stop the pipeline. All the positive things that need to be said to bring down the prices. So that's a good thing. And then let's see from there. Let's go over to the metals complex. We just looked at silver. Oh, I see what I did. I skipped right into some of the energies yakking away about the Russian Federation. And so let's just go back to copper now and see what copper's doing. We were a little surprised to see the strength in it. And we said, wow, that's really cool. Now, obviously, that's straightened out. And you can see there's pressure on it right there. And let's put it up over here. And there's the copper doing the same exact thing. They look a lot alike, the two of them, right here and right there. You can see. And they're pressuring down. It's doing the same thing here with the line, doing the same thing here with the line. And at the same time, the weekly's just kind of cruising along with that weekly buy, but this seems to be in about a 30-cent range, 40-cent range, kind of going up and down. Not really doing anything that's too exciting. And when it comes to like being paranoid or nervous or any of these other things, it's just kind of it's copper. It's an industrial metal. There is some talk of not obviously inflation, of course, but more than that is we're seeing some talk of recession. Now I don't even know how. In some ways, with QE and the Fed portfolio and the political control that the left has on the Fed, I'm not really sure how a recession will look. It'll look ugly, I can tell you that in some ways, but how much of an effect on us, it kind of falls into that category of, they used to say that we couldn't have guns and butter. It had to be one or the other, and what they were really saying is you couldn't have a war and you couldn't have a war without having problems with food, natural things around us. In other words, the war effort would take away the materials away from the general population. In these times, it seems like that doesn't seem to fit so well. And so, guns and butter, that was the expression for it. So in this case here, if we're going to have a recession, and that's what we're thinking, going into 23, then the question is will copper be up in the 440s, or will it be like 380, something like that? Will there be interpretation that because of inflation that they won't bring it down to into the threes? Maybe it'll stay in the low fours. There's a big question mark out of all that, how to deal with that, how it will be measured at the same time. So as much as I'm always saying, hey, doesn't anybody know in the metals complex that there is inflation? Same situation here, and that is that will copper hold up? Will construction hold up? With interest rates rising, I'd say, as someone who bought a house with something like 15% mortgage rate back in the old days. When we had interest rates. Let's see, was it 1990 something? And I guess it was like I think I got a 13 or 14% mortgage, something like that. And I had an adjustable, so it was an adjustable. So I was playing the market at the same time, and and so what would happen is that I was betting that interest rates were going to drop, and so having a fixed one was like 2.5% higher, and I went with the lower. It was like mortgages were like 16, 17%, and I got like 13, 14% because I had an adjustable, which meant that it could go up in cost. But overall, over those years, it's always going down to zero. So um, that is what it is, I guess you could say. Now the interest rates in the mortgage are, 3% or something like that. And it's the same mortgage I had when it was 14%. And it's pretty much just marching along in its own way. So that is what it is. What else can we say about that? I don't think there's much more, but that's the only answer I have for understanding copper and the metals and the inflation and the possible recession that is allegedly around the corner. So that is where we are. Now, from there, let's see. We looked at copper. Oh, let's see what platinum's doing. I always have that interest to see, that metal. Due to the fact that I've been involved in the markets for over 40 years, I have a real hard time appreciating platinum trading underneath gold. You see there, it's trading at $1,000.12, and then obviously we'll throw it up on J4X. Gold, not there. Gold is trading at right there at 1,819, almost $1,820. So it's $800 discount, which is not something I'm used to. No matter how many years now I'm watching discounts to platinum to gold. So that has me always, as someone who grew up and in the financial markets all my life, I only knew platinum as a premium, not a discount. Anytime it went to a discount, it was a buying opportunity. Now, in financial markets, that is a curiosity in the sense that will we see one day platinum again trading over gold, and I'll be saying, oh, see, it was trying to tell us, and it just happened to be trapped in that situation. Now, if we didn't have quantitative easing, notice that the discounts became very pronounced, I guess you could say, when we had quantitative easing. So that's what has me confused. And that is what will happen someday when we don't have quantitative easing. Will we see a platinum again in the pluses? And what do I mean by pluses? I mean trading over the value of gold. And then where will gold go? I mean, none of that makes a lot of sense to me. I'm like I said, I'm perplexed by the whole adventure when I see, the price tag. That has me always confused. Always. I don't. I really don't feel comfortable watching platinum in a minus, and I wouldn't recommend anybody to invest in that way. In other words, I guess if you're a metals buyer, if you can buy platinum over gold, I'd go for it, because I really have a hard time believing that platinum is going to stay minus when there's no QE. Whereas I have no doubt gold will go up when there's no QE, but I don't have comfort level to believe that I would want to be the seller of platinum and the long in the gold, because when that does end, boy, I just have to believe that they'll go back to normal. So that is just just my opinion. There's the only technical math side of that is we know now that with QE we get some strange discounts in different areas, and we don't know what we know. That it all has to do with the fact of the dollar. In other words, there are many different ways people try to get long dollars or get short dollars. And we really believe, through the grains and through different commodities, they use them as a surrogate to the dollar. And we have to assume, since platinum is a very small market, they've been using it pretty harshly. So that is my opinion of it all. It's not any real math there, just an opinion. Let's see. From there, let's see. we saw silver, we saw gold, we saw platinum. I guess that's it with the metals market. So from there, let's go over to the stock market. See what's going on there. Let's see, which one is that? Let's go with that. We'll put J4X over here on the first one, and that is the Tech 100 right there. That's the NASDAQ 100. And let's go right there. And that's what that is right there on an intraday basis. So it goes through the zero line here, goes into the buy, and is in a buy. So notice it didn't break down. And you can see the same thing going on with this math. This is the super. We like watching the super on the, and this is an intraday. This is a 2.5 Tesla. No. It's almost a 2 Tesla. That's what that is. 2 Tesla, it would be 396. Yeah, it's a 2 point, this is a 2 point, was it 2.23 Tesla? That's what this is. 2.23 Tesla. A Tesla is 396. And so that's what this is. And you see here, that's the, yeah, let's see if we extend that into yesterday. There we are. So you can see here, this is the kind of the European Open right here, and it goes into a little buy, goes up in value, and it breaks down a little bit there. One bar sell, and then back into the buy again for another rally, and same thing there, catching another rally. And this is just intraday, gaming going on. You can see it goes into a sell there, it goes down a little bit, goes into sell there, goes down a lot more. A little buy, and then it's been in the sell for almost this whole move down up until right there, and then goes back into the sell again for that slide, and now we are back into the buy here. Now it's flirting as we speak with the sell. At the same time, you can see the blue right there. This is the super right there, as you can see, and this is the intraday. And then we can show you how our daily looks. Where's our daily? Daily's right there. And there's the daily of the same product, just like right here on J4X, with the pressure on it the last couple days. Same thing here, pressure on it, red dots. Well, we had a little green action right there, but that just gave us a signal of volatility. It's trying to lift up a little bit here, but overall, what is it? It's down for the day. And how much is it down for the day? Let's see. I'm a little confused. I don't see how much it is. I thought this showed us. Oh, I see. I cut out that. I had to find it's in here somewhere in the red. I think it's down about what is that? It closed yesterday at 59, basically 60, and it's trading right now at 33. So it's about 27 points down for the day. So that's showing some natural weakness, nothing major. Fair value wise, when you look at the basket, it's about unchanged almost. Now let's take a look at the S&P 500 right there. Same situation, just mildly weak, down about 2 points. And you can see that right, let's see, this is a Tesla and a half, I think it is. And you can see that right there, down 1.75, 1.25, 1.50. See it right there? Yeah, and let's put it up on J4X. And you see the pressure on it, moving down. There was the buy, and went up. Went to the sell, kind of went down a little bit, then jumped back into the buy. Now we're pushing into the sell here. Matter of fact, if we go like this and go with the bigger one that I like to use throughout the trading day, you see it's pushed into the sell. Now it's trying to push itself out of it again. Went into the buy right there, and now it's flirting with the daily sell. You see the math has been pushing down with that, especially when it drops underneath the white line. Right there is the sell right there after the close of that bar right there. And the pressure has been down. Now notice how it jumped above it, and now it's trying to pressure itself. And there was a good sell right there. And so that was nothing because it's a red and a green. So that was a good long sell all the way down to like right in here. You can see even then it got a little sloppy. There was the first buy of it, and it stayed in the buy even with all this choppiness. And then it pushed itself into the sell there and jumped back into the buy right there for that move. So, that's the intraday. And I think, what else can we say about that? I guess that's about it. And then last, we'll take a look at the Dow Jones Industrial Average, and if nobody has any particular opinion on what's going on, you can see that is up 47 points. And you can see it's went into the buy there, right there. And it's marching its way up. And then, let's see, let's put it up over here on J4X on the daily, and we'll take a look at it at the daily too. Right there. There we are, right there. You see that? Oh, I don't think you're seeing the intraday. I didn't check. Did I show you the intraday? Yeah, right there. There's the intraday of the Dow Jones Industrial Average. And you can see the daily is flirting, trying to get up above. You see it over here on J4X. We are still in reds, but it will start to shift, and I bet the lines are heading up. You can find the lines. There you go. Not yet. Not yet on the daily. But ours are flirting with it now. So if it stays like this in a couple hours, the J4X will join in. And that's not because J4X is not alive. It is live. The problem is that our math is just that more advanced. That's all it comes down to. Nothing more than that. And the closest of the accuracies of the math is this one right here, the two battles of slow versus fast stochastic. And then the Hinkies move a much slower, about a couple hours behind to the dots. And that's the best you can get. I mean, there's nothing out there publicly, and I always say that if you see something that's better than our Manhattan indicators, give us a yell. Tell us, because we'll look at it, see if it can compete. Because if it can beat the Manhattan indicators, then we'll utilize it on some level. Because obviously, the math is the answer to all this. When you're a proactive trader, you need the best quantitative information you can, use. That's the way it works. All right, it's been another quiet day. No one's really asking any questions, so Doc's going to get out of here then. Get ready for the next adventure. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, we will catch you all tomorrow, same time, same channel, and that'll be Happy to Hump Day Wednesday. Bye-bye now.